Hey guys, this is Adam from Dodjit.com and this is your video briefing for the 2nd of November 2009. Wow, what a week. Who got hammered out there? Now, it was a really volatile week. I think it caught most investors by surprise. We were expecting a pullback, and we stated in our last video that we were expecting a pullback to roughly around this area, maybe slightly a little bit lower, and then basically what happened on Wednesday, the markets just completely got hammered and they really dropped lower. Now, the funny thing was that on Thursday the GDP data came out and the markets just rallied back higher, and it's like everyone was going, what is going on here? And basically what happened was that GDP did come out better than expected and the numbers were good and everyone was really happy. The problem is that the numbers were not really fueled by consumer spending, and what most analysts and investors are now thinking is that maybe the GDP numbers that came out on Thursday, and it was a 3.5% figure, it's basically because of all the things that the US government they've been doing. They've been like pumping in a lot of money into the system and stimulating growth and stuff like that, and the mortgage rebates and all of that stuff that has really been priced into that GDP result. Now the problem is going forward is like this: if the economy doesn't start to pick up and unemployment doesn't start to drop lower, that means that consumer spending is not going to get back to its normal state. And if that happens, then all this GDP growth, all this growth that we're looking at the moment, isn't really going to reflect what's really going on in the economy. And I think that's what most people are now scared of. People are scared that consumer spending or consumption isn't going to really head back to a normal healthy situation, and then basically what's going to happen is that this massive rally that we've had over the last 8 months or so is basically being fueled on nothing. So basically there's a lot of uncertainty now going forward and a lot of volatility. That's why we're seeing basically a lot of volatility around this area around here. Now let's just flip over for a second to the volatility chart and look at this. This is absolutely horrifying. Look at volatility. This was absolutely amazing. Just on Friday, volatility increased by over 23%. Look at this. We completely broke our trend line, going lower. We were trading below major support. I thought this was going to continue lower. We were testing it. We just smashed higher. We gapped up higher. This was last week and just continued all week. It was absolutely amazing. That's why we saw on the S&P 500 such dramatic trading. Look at this. Up, down, bouncing all around. Really volatile stuff. Alright, so what are we looking now at the moment? Well, over the last couple of months, and for those of you who have been following these videos, you've noticed that we've been pretty bullish on this market. If you've got positions, we've showed you loads of positions, especially on the different currency pairs, to take this market higher, especially the euro, the Australian dollar, stuff like that. Now, we are starting to get a little bit bearish on this market, and it doesn't mean that we're becoming a complete bear, but at the moment we are still in this major uptrend going higher. You can look at that, you can see that at the moment, and we are receiving this massive correction. Now, we stated in a few of the videos and the reports the importance of a higher low. If you just check this out for a second, let's just draw a few here. We can see that in a trend or in a bullish trend, normally in order to define a bullish trend, we're going to have to define it as a series of peaks and troughs that are just going higher. Now, you can see here that we have received these troughs going higher and we are now coming down. So the question is, what's going to happen around this area? We're trading around our 50-day moving average. The question is here whether we're going to start to stabilize out a little bit, form a higher low, and then continue higher. Now, there's a lot of bearish news out there at the moment talking about profit taking, investors getting bearish, and that just like signals to me that maybe we don't really need to be that bearish on this market, because you know how things work in Wall Street. It's normally buy the rumor, sell the fact, and if everyone's now a little bit bearish on this market, the question is if we are going to receive this one leg higher. And if that does happen, that's going to basically coincide with an end of year rally. So think about it. Markets are pretty bearish at the moment. They've really declined over the last week. Let's see what happens over the next couple of trading days. Obviously, if we're going to continue, if we're going to break our prior low going lower. We're talking about roughly 1020.25. You can see roughly around here we've got a lot of resistance. Here we've got support, so we're talking roughly around this area. If we're going to break it lower, so then yeah, you want to start thinking about probably more bearish position. There will be a lot of charts that are going to be setting up. Let's see what happens around this area. This area is going to be a very, very critical area. Let's just flip over for a second to the Nasdaq. And you can see basically the following. Now, if you recall, the Nasdaq and financials, they were leading the market higher when we were going higher during the whole of April till August. And you would expect something that's gone so high to now start to retrace a little bit more than the broader market. And look what's basically happening. Basically, if you just look at this, where are we trading at the moment? Smack on our major support trend line. I don't know, however you would call it. And you can see that the trend is still intact. We are now at a critical level on the S&P 500. We're watching out to see whether we're going to break our prior low. On the Nasdaq, Dow Jones, the Dow Jones is actually holding up a little bit better than the broader market. Nasdaq has now reached critical support. Let's see how it plays out. If you look carefully also on this, we are now trading around critical resistance, support, and double support around this area. Let's see how it plays out the next couple of days. I think we're going to have to receive Monday, Tuesday. There's going to be a little bit of intraday volatility. I think we might receive a little bit of a bounce today higher. We're going to have to play it by ear. For those of you that are in the market or waiting to get into the market, I would wait a couple of days to see how it plays out. Now, before I finish, I always just like to go over a few different Forex charts, and we're going to just really rush through these because we haven't got that much time left on the video. We've got here Australian dollar against the US dollar. You can see now, what I just want to show you in these videos is the importance of trend lines. And look at this trend line. Smack on trend line support. We received this hammer-like candlestick around this area here. You can see we are now climbing higher. Let's see how this follows through. You can already plot your trend line. Obviously, if we continue above 0.91, trend is still intact. Flipping over to the euro against the US dollar, we've got the same type of situation, climbing higher. We are now on our trend line, and again, let's just zoom in on this recent price action. We've got our trend line. We can plot a minor trend line going like that, and obviously if we're going to break this level, just keep a close eye out on resistance around this area. What I would like to see is for us to clear the whole of this area going higher, 1.4843. Obviously, take the trend lines into consideration. If we break them lower, then we are going to be starting to search for bearish setups. And what I mean by bearish setups is obviously a break lower. We're going to be starting to look for retracements to the upside to take the market lower. The last chart I want to show you guys is the pound against the US dollar. Now we're receiving this, and we've stated this quite a few times on the website, this type of cup and handle situation. The problem is we've got major resistance around here. Now we received this type of pennant. You can see we really rallied higher, and now we are trading in this minor triangle. If you're looking at the pound against the dollar at the moment, I don't see really any trade here at the moment unless you are ranging this market, trading the range. If you're waiting for a breakout, I would wait for a break of either resistance around 1.6663 or 1.6186. Hope you liked the video. Let's see how it plays out the next couple of trading days. Don't get itchy fingers. Let the markets decide which direction they want to go, and then we can join. Even if it is 1 day or 2 day trading days after, it's a lot better to get that margin of security in there. My name is Adam from Dodjit.com.